This is a repeated pattern that we see over and over and over again in the markets, and does suggest that with kind of the markets being a little bit overbought here and kind of flirting with a sell signal, that we could see a little bit of a corrective cycle here over the next, couple of weeks heading into the election. Again, markets typically this time of the year, in terms of particularly in election years, you typically get a correction just before the election. No rhyme intended. Let's talk about what you need to know before the bell this morning. S&P rallied nicely on Friday on that employment report, right? So very strong employment report. Surprised to see the market rally as strong as it did, because it pretty much eliminated the possibility of any Fed rate cut of 50 basis points in November. We're probably talking about a 25 basis point rate cut in November, but really, honestly, if I'm the Fed and I have employment that strong, I wouldn't cut rates at all. We'll see what happens, but I think there's a risk the market might be surprised come November. They could just sit tight and go, well, we just cut 50, let's kind of wait and see. But we'll see what happens. Markets are expecting a 25 basis point cut. Markets rallied back towards the top of this consolidation range. And again, this is where we are. Again, markets participated very nicely on Friday this morning. Futures are pointing lower by about 34, 35 points. So again, we're going to kind of give up a big chunk of those Friday gains, at least at the opening bell this morning. But again, we're just kind of in this consolidation period, and we've talked about these type of periods numerous times here on the show, is that we get into these kind of consolidation ranges, and then eventually the market kind of either breaks down or kind of consolidates and then finally moves itself higher. The 20-day moving average is coming up. We've got support here right at the bottom of that little pullback we had last week. But again, here's another consolidation range just like this, right? Where markets just kind of trade sideways, and we finally broke down a little bit, tested the 100-day moving average, and then we kind of rose up from there. This is a repeated pattern that we see over and over and over again in the markets, and does suggest that with kind of the markets being a little bit overbought here and kind of flirting with a sell signal, that we could see a little bit of a corrective cycle here over the next couple of weeks heading into the election. Again, markets typically this time of the year, in terms of particularly in election years, you typically get a correction just before the election. No rhyme intended. But just kind of de-risking, not really kind of understanding who's gonna get elected, what the outcome is going to be, etc. You typically get some kind of pullback here. We'll see if that happens. Markets typically rally about 4% through earnings season. We've already done most of that, so we've kind of front-loaded the earnings season rally as well. So unless earnings are just absolutely stellar and outlooks are strong, we may have actually kind of front-loaded some of that earnings season here. So we could continue to see potentially a little bit more choppiness here, and potentially a little bit of a correction here before the election. Then once we get through the election, obviously, then we're probably going to have a year-end run into the end of the year, just as markets start to position for whoever gets elected and what the outcome looks like. Of course, one of the big risks to the markets around the election is a contested election. In other words, we have the election, but we don't have a clear winner for one reason or the other, and the thing gets contested and drug out, which is potential. That could also kind of weigh on markets. So with the kind of the takeaway here is, at least for now, be a little bit more cautious. Just be kind of a little, don't take on a whole lot of risk here. And again, we'll kind of talk about some more technicals this morning on the show. But this, we're kind of elevated, kind of pushing, higher levels in the markets. And so again, doesn't mean to be bearish here. This isn't a time to de-risk your portfolio a lot, because the markets are doing just fine. But again, maybe not be overly aggressive here. We'll, just kind of play this kind of day by day. We'll keep you updated here in the mornings as we do the morning update. But again, there's not a real clear signal, either bullish or bearish right now. So just kind of maintain a more even keel, but just manage the risk in the portfolio. A little bit of extra cash right now certainly would not be a bad idea. All right, that's what you need to know before the bell this morning.